Welcome to Momentum Monday. Today is May 17, 2020. And yeah, our new sponsor, Manscaped.
Yeah, I mean, that's generally at my age, Ivan, you'll see, you just have something in your hand, cutting random hairs off at my age. It's like Zorro. I'm just constantly clipping pieces of hair off my body. It's not, listen, you don't fight all the same demons, but you're fighting, your body starts taking over itself. Like hair stops growing on the top of your head and then just like in between your toes, on the tip of your nose. It's disgusting.
That's too much information.
But I'm trying to, we're trying to be honest with people here. Okay, it's gorgeous day here. I just rode 50 miles.
Wow, impressive.
Yeah, I'm in the best shape of my life right now.
Fantastic. Yeah, that's what we want to hear.
Yeah.
So looking at the
market, F45 opened. Did it open in San Diego? It opened here.
No gyms are open here. So
all right, we'll go for a run on the beach. Maybe play some tennis.
Yes, if we find a court. Everything's closed.
Oh, really? Okay. Yeah. Well, I'm going to be in San Diego tomorrow, so I'm excited to hang out.
Awesome. Yeah, definitely. It's a beautiful place to be in the summer.
All right, hit us up. Catch us up.
So early last week, it was interesting to notice that several different pretty popular money managers came out publicly saying that the market hasn't been so overvalued since 1999. That's what David Tepper says. Then Stanley Druckenmiller says the risk to reward he hasn't seen a worse risk to reward on the long side. And then more recently, we found out that Warren Buffett continues to sell. After he sold his entire stake in airlines, he's been selling his positions in Goldman Sachs and JP Morgan, which is very...
I didn't know that. I did not know that.
Yeah.
Those stocks look really heavy. I was looking at some Goldman puts on Friday, some smart people. So that explains it. Okay.
For someone whose favorite holding period is forever, this is very strange to see that, especially, I mean, he's the type of guy who buys during market.
I know, but why is it strange? Go back to a monthly of Goldman. He's milked that. Like, it's not going anywhere. Their tech business is not really a tech business. We've had the greatest boom of all time, and he's made his 8% interest on that. He should be if he's a professional, he should be reallocating. So man, Goldman could be in a lot of trouble if he's going to be selling the rips on Goldman. Okay, so I do, a lot of traders are okay, that's interesting.
But in the meantime, we continue to see deep buyers being in control, especially in tech.
Yeah, Nasdaq is the only place to be. As I've been saying, QQQ over SPY, you can't be, unless you love bottom fishing or something, and in a market where we're in the raging new bull market in the Nasdaq 100. I mean, again, this could just be a rally inside a bear market because of 30% unemployment. It's very confusing. I'll give you that.
And it's very interesting that, some of the moves in software have been just insane. I mean, so many stocks have basically doubled from their March lows for the past 2 months.
Atlassian and DocuSign, the two stocks that held up the best, and I'm an idiot. Those are the two that they held up the best during what was down 15-20%.
Yeah.
And then DocuSign.
But it's not just those two. Basically, it's any...
No. But those were leading when the market was selling off.
Just type any enterprise software.
Mongo.
Not only. Look at
Wix. Wix blows my mind. It's kind of like a Shopify.
It's more than doubled since March. Look at this. 75 in March. 200.
Yeah, I was telling the WordPress people, I mean, that's just an ugly WordPress. Look at the monthly on Wix. It's just the only game in town for hedge funds. This should have been WordPress's market. WordPress is Shopify. And if we look at e-commerce this week, Ivan, that was where the money is.
Yeah, Shopify, eBay, all of them have done really well. Amazon It's
eBay caught up. eBay caught up. Jesus.
Yeah, look at Amazon. That's a beautiful base here, setting up for a potential breakout.
Even though he told people he's just going to take a year off, and
Exactly,
that's
doesn't
COVID
matter.
supply chain. Yeah, Etsy, unbelievable.
New all-time.
That one stopped me out. That was one of my 8 to 80s in
all-time price. Incredible. Mercado Libre. Let's see. Yeah. Also, big earnings breakout, holding the breakout.
When that goes above 800, Ivan, it's 1,000. Where's the weekly? I mean, wow.
The weekly is the monthly.
Look at that breakout.
The all-time price. So definitely a lot of strength in tech. Unbelievable. Maybe the only exception is kind of semiconductors, even though NVIDIA broke out to new all-time highs and AMD is kind of setting up to break out, but SMH as a sector, it's kind of...
Well, they get the weight of the tariffs. I showed you the chart. They have the weight of the tariffs, right? Unless you are true, and NVIDIA and AMD are gaming slash very sophisticated gaming and speed platforms, which the gamers love, crypto loves, and both those markets are just in a COVID world, and you know, insane. I think even Bitcoin, you know, it's very volatile right here and kind of shaking people out. But the dollar flows, well, that's a bad chart of Bitcoin, but that's the ETF. But anyways, there's just a lot of financial speculation around software. Yeah, I mean, it gets above 10,000. You can see the volume creeping. It gets above 10,000. This could easily go back to 20. This could easily double. You know, it's just a simple piece of software that people has a credible brand name. Government's printing money. You know, I don't know. I'm super bullish. The other ones, Ivan, that I'm super bullish on are biotech. You've been covering this for weeks. It's just with the top 100 stocks are biotech stocks.
Yes. Incredible breakout to new all-time highs in biotech, a pullback to its rising 20-day moving average, and a bounce. I mean, granted, there were a couple of distribution days in the middle of the week, but overall, there's so many good setups in biotech. And I'll just give you a few examples. NBIX.
That looks beautiful. So what are they? Neurological? I mean, this is not my area. It's a really bummer. I'm long both indexes right now, which is rare. I'm long XBI and IBB, meaning I have a position in biotech and buying the dips. I mean, you know, it's just incredible. So show some other ones. I have a list that I built on Koifin. Let me share my screen, Ivan.
Sure, go ahead.
Okay, so people can hit me up. I'll share my list of leading biotechs.
Stop sharing mine, and then you share yours. All right, go ahead.
Try mine. Hang on. Thanks. Just because, Ivan, you can go through these. Let me just share. So I've created a list on Koifin. Can you see it, Ivan?
Yeah.
You know, Dexcom, Illumina, Vertex, QDEL, Regen. So I've created this list that is just Regeneron, CRISPR. I'm long CRISPR. This is the genomic stock, but QDEL, Vertex, Illumina, Dexcom. What's this? Acceleron Pharma. Are any of these ringing a bell to you, Ivan?
Yeah.
Amgen's ready to go. Amgen's at all-time highs. So IMMU. Jesus.
So many. Yes. Yeah.
All right. So you've got to be shopping there. And then I'll send this back. Hang on one sec more, Ivan, because Om, who I had on my podcast, just want to pull up a few charts before I send this back to you. So Om was saying, I don't know if you can see my screen,
yes.
but in Shopify, Shopify CEO Harley Finkelstein points out that between March 13 and April 24th, the number of consumers who bought something for the first time from any Shopify merchant grew 8%. This is a company that's already huge. And from merchants they never shopped at before, 45% compared. Okay, so the e-commerce numbers are staggering, right? And once people go e-commerce, they never go back. Even myself, like yesterday, I went to the mall because they're open here just to try and stock up on, and I'm going to share one more thing, just to stock up on Stance underwear and socks and some Lulu stuff, just zip in, zip out, and get some stuff for the summer. And they're not open. And I need some biking stuff. My wife said, just go to the Rafa website or the Lulu website and order something. And I did. I don't love ordering online, but it worked. So one thing before I go back to your screen here is you started the show by talking about Tepper. Here's a chart by someone that shows all these people leaning against the S&P 2829 number. You got Gunlock, Tepper, and Druckenmiller. Is that what you were talking about early?
Yes.
Yeah. So these guys, I first of all, I don't believe them. I think they're hedged. I don't think these guys need to like make a huge short bet. Secondly, like Buffett, I think they're misallocated, meaning I think they are right. Like I think the old economy is not going to come out of this. The FedExes, the Boeings, the airlines, the hotels, retailers, there's some tremendous headwinds, like where rallies will get sold, even if the virus is completely behind us. And so their problem is these digital stocks, which they've missed, have just jihaded to the upside. And then we look at this, the Davy Day Trader thing that Josh Brown shared. If you can see this, this is an incredible move. These kids cannot be put back. When I look at this chart, Ivan, 18, 19, 2000, can you see it?
Yeah, absolutely.
Okay, so these kids have survived a crypto crash right here, right? Avocado shortages, I joke, but avocado shortages. They survived a shitcoin bubble. They've survived a pandemic. They've survived shitty employment, underemployment, and they've survived, a VIX 90 and a stock market crash, right? And sure enough, they were buying the dip, and they weren't buying Goldman and they were buying biotech speculation, COVID stocks. They were buying Tesla. They were buying software companies. So these kids are sitting on gains. Will they give them back is to be determined. Have they used the zero commission? We hit some kind of tipping point, and it could be because of sports, and it could be because of COVID. It could be but I think it's a combination of 0% interest, social networks, fractional share ownership, right? And the fact that kids can follow you, and really move their money around and not. Now, the question is what happens when sports opens, and what happens if the Nasdaq drops 30% quickly again? Will these people give it up? But I'm not so convinced. What's your take there on this?
I mean, once you have the market book, it's basically you're very likely to stay. And yeah. We've seen definitely an incredible rise in popularity in so many people open new accounts, especially now that everyone is working from home, and basically trading has become like a side hustle for so many. Definitely, I've seen that in various different perspectives. There's been a huge boom.
And I see it on StockTwits. The amount of new people has doubled this year. We'll probably have 5 million registered users by the end of the year, from 2.5 million. Okay, how do I get the screen back to you? Okay, how do I stop there?
And then I share mine. All right.
My dog is having literally a breakdown. Are we back with you?
Yes, we're back with me, and obviously the other big breakout that I wanted to talk about is in gold and silver. Silver finally started to outperform gold, which is typically bullish for both. When silver outperforms gold, typically both are rising. And gold, it's nothing new with gold. It has been a notable leader, is setting up near multi-year highs, and so are gold miners and silver miners. It's just the reflation trades. People know that the only way the current rally survives and the current economic systems survive is if they print more, basically. And therefore, the price of gold, silver, Bitcoin has been rising, and they're setting up for even higher prices. It's
Yeah,
been,
rare that I'm long GLD, rare that I'm long biotech. I've never seen anything like this, but that's what the markets do. It's just something new all the time. And in a market where Buffett's confused, Tepper, that's not a reason to be bearish. That's a reason to say the markets are just evolving.
exactly.
And I'm not going to be this uber bull. Believe me, I'm not. I'm 50% cash, and I think that I'm trying to squeeze as much beta out of being a high cash position as possible. But guess what? So are millions of other new fractional owners. And I had an interview with Peter Brand, and Peter Brand's 75 years old and as wily a trader as you could have. And he's like, went all cash on this rally in his retirement accounts. He goes, I'll try and make a living, but I'm taking that panic as a last warning. And it seems like a lot of the older generation, I don't blame them. The game has changed. You know, there's not a lot of public companies. You got SPACs that have the greatest brands in them the kids want, from Virgin Galactic to DraftKings. There's going to be 20 to 50 more that I know of coming. And look at Virgin Galactic, the amount of activity, even though it's kind of like no revenue. But if you look at DraftKings, which did a SPAC, DKNG, it's the #1 ticker.
Yeah.
I mean, there's nobody on Wall Street trading this. There is nobody long AMD and NVIDIA, right? They're all long. They're all long Intel and the old names. You know, these are just too expensive. They don't understand them. They're going to be volatile. You can see how many, you know, how these things have 50% sell-offs, you know, every 2 years. But I don't know, man. Tariffs haven't stopped these. Pandemics haven't stopped these. I'm not going to be the one that says the market's overvalued here.
Yeah, to me, it's interesting with so many people holding so much cash. You know, how long is that going to last? Because right now we know that savings accounts are not paying anything, zero, for cash, and bonds are not paying much either. And in the same times, you have quite a few stocks that are paying like substantial dividends as of right now after their stocks drop. You know, there's some REITs that are paying 10, 12%. So if you think they'll survive, you know, they can double in 3-4 years. And in the meantime, you can get paid 12% a year just for holding your.
As a swing trader, Ivan, how are you positioned right now?
Oh, I'm active. I'm active, but I definitely have way too much cash that I've been holding, and I've been thinking about just positioning it into a few of the high dividend stocks, just because it's just sitting there. I'm not using it. I'm using.
And why aren't you? It feels like a trap when guys like you and I have high cash still keeping up with the indexes, and feels like a bullish tape because all the big money is on the sideline, or like we said, they're just talking the market down for whatever reason. And it's just such an old economy. You look at Boeing, you know, or you look at any of the airlines, and they just can't get lift on this.
Yeah, here's the airlines ETF.
You can't own that.
Well, Buffett doesn't want to own them. I don't want to own them.
And then you look at the XLF, and you just go, no. Any rally should be sold. I mean, maybe it's starting to bottom, but I just don't trust it. Where's the U.S. dollar, Ivan? Is the U.S. dollar still just?
It's still holding pretty strong, and this is what's puzzling, that gold and silvers. I mean, they've been the strongest they've been in many years, and the U.S. dollar has held really, really well. So.
And then Mercado Libre, right? It's breaking out with the U.S. Like, that's weird.
Yeah, absolutely. It's probably one of the strongest.
That's weird.
Latin American stocks.
Because the other Latin American e-commerce stocks, which I also own, have just been dogs, Pags and Stone.
Yeah, for the most part, yes, the Brazilian ones, but they have their own.
No, but shouldn't e-commerce be just as popular as it is in the U.S.? So it's just I want to let people know that it's just very confusing. So if you have high conviction, I question how you have it. I think price action in the right stocks is fantastic, and it's not as narrow as it's not enough. It's not so narrow that it scares me, but at the same time, the market is not easy right here.
Yeah, absolutely. It's definitely not easy, but definitely a lot of strengths. software, biotech, gold, silver, but
Yeah.
everywhere else, it's very choppy. Yeah.
And I don't think people should be messing with the bottom. You know, it was fun to watch Davey Day Trader with airlines, and I mean, just so amateur. Like it's entertaining, but just so terribly. That's how you go broke. Is just like he's making fun of Warren Buffett and buying stuff that Warren Buffett's selling. Not smart. I mean,
he's lost a lot of money. He's probably down what 10, 12
yeah,
million dollars already. So
yeah.
well, for a guy who has 150, I guess 10, 12 is not a lot, but
yeah, but it's a game of winning. And I just don't think people should be looking at these charts. Look at these. There's no edge. It's just nothing but heavy selling and change of ownership. These are going to take, there'll be spikes up, but there is just a lot of work to do. And even Disney, I mean, that's the one that you need to watch. This is the global barometer for the world getting back to normal. Thanks for bringing this up, Ivan. This is a great company. These guys will figure it out. Them and Apple and Lulu at retail. These are the companies that are going to put butts in seats again, right? And Walt Disney just is at a severe disadvantage in this post-COVID era. And you can see it in their chart. It wants to go higher. You know, they've got Disney Plus, right? It's trying to find a bottom, but it would not take much for that stock to crater at this point, right? Still below the 200-day there, Ivan?
Yeah.
I mean, very dangerous, precarious position. But that, you know, instead of watching the airlines, people should be watching Disney, because that is a well-run business in a old world economy, and they need a lot of breaks at this point. And so, you know, you may get more bang for the buck in the airlines, but this is the old economy stock to be watching, because they need to open those parks and sports. Right? Like 2/3 of that business is, you know, or 3/4 of that business is reliant on, you know, people getting back out. And there's a battle going on there. And I think that's the same reason you see Tepper and all the old guys saying this is over. You know, they just feel the weight of this old economy and the 30% unemployment. So if you've been able to sidestep that and be in digital, Ivan, like you and I in biotech, you know, kudos. That's kind of why we do this show. I just don't know what the allocation should be. And for me, it's 50%, and it sounds like you're still too low.
Yeah, it just depends on how comfortable you are with drawdowns. I'm not comfortable with drawdowns. I like to keep my drawdowns super small, and this is why sometimes I'll just keep a large cash position just because I don't want to see a big drawdown.
Yeah, well, you've done a good job this year. I think this show is helping a lot of people. It's not helping Davey Day. I think Davey Day Trader, if he came on our show, we could turn him into a monster winner. Do you think he may be just too emotional? I don't know.
Well, he's definitely super smart. He just needs more time to eventually figure it out. Eventually he will, if he continue to do it.
If he traded next to you, he would just love. It's just weird for a smart guy to just continue to just pound his head into a wall when he could just tune in. I've invited him. He could just tune in and just sit and listen to you. And I think guys like that, this is where I go with the young kids. I think they're just going to get this stuff, right? You know, if they hear smart people think about this, and they don't really care about the cruise lines and the banks, you know, I think the hard part will be, is the Nasdaq 100 the new barometer for the economy, and not the old economy, just the relevant economy, the economy of work from home, right? Like this week, Twitter and Microsoft announced you may never go back to work.
Yeah.
Okay, so forgetting Twitter, the stock, that's pretty interesting.
I'm not surprised. It's been a big ongoing trend since the early 2010s, and it just accelerated.
Yeah. So I just think people need to remove competing them. I think people are going to be sorely disappointed, Ivan, if they compete themselves against the S&P. It kind of, it's not who your market is. And I think people need to have cash levels that help them understand that the real index to track in a post-COVID world is the Nasdaq 100. And most hedge funds are massively underperforming it. And it's a hidden secret of the industry. And that's why kids are doing it themselves. And I think could be, you know, my big prediction, Ivan, this could be a huge swing. Like people think the Nasdaq 100 can't go. Look at all the money that could come out of S&P and move into the Nasdaq 100, right? So valuations could get really silly if you're trying to squeeze money into these rare Nasdaq 100 companies, especially biotech stocks. And we're seeing the volatility in as money tries to just come a little bit into biotech stocks. It is crazy, the volatility.
Exactly. So what's your take on China right now?
No take. I'm very bearish. I'm very bearish on U.S. You know, I'm watching Bill Bishop, and he just, granted, he's very very liberal, but he lived there, and just I read his newsletter, and it's just our rhetoric, and the Republicans' rhetoric is very bearish for U.S. relations. Now, is China wrecked? No. Look at Tencent, because they have a digital wall. We're building a physical wall, and they have a digital wall. So all these companies have like free reign in their behind their own wall, and they have remember, Indonesia is like a massive market, Ivan. I don't know the ticker, like I don't know how to track Indonesia, but these companies are in the adjacent markets for Indonesia are just massive.
There you go.
It's no biggie. But so China, I'm not super bullish on, but I'm you know, but I'm super bullish on some large Chinese companies moving into Indonesia. Is that Indonesia right there?
No, that's not Indonesia. That's the Chinese internet index, and it's kind of looking bullish. I mean,
kind of looking bullish. But if you're old economy, I think this is that SMH thing. If you are selling to China, or you're relying on fabs in China, you could have, and this would really melt people's minds, if the semiconductors rolls over without the Nasdaq rolling over, or flat. And I think NVIDIA, which is 8% of this index, is the reason this thing hasn't already rolled over. So, you know, it's a very interesting market. I think people are going to have to be very creative here. You know, for me, it's high cash. For you, it's high cash. But we're not scared here. I would say I'm not scared. I'm just like trying to pick my spots.
Oh yeah, I'm actively trading. I mean, every day there's so many good opportunities. It's just, you just take them.
One favorite idea didn't work, and I don't know if I'm going to add more, is Taser, AAXN. You know, it did crash with the rest of during COVID, but you know, I kind of got tricked in here on this last route, and I haven't decided. It's kind of giving back the whole gap. So it's not easy out there. Not everything, and then again, not a digital company. Obviously, Taser is not a digital business, but I kind of got fooled there. And then I think Ivan, the biotech, I think it's real, the XBI. Yeah. And I think if the software boom continues, then we'll see a rollover into crypto and the blockchain. So we'll check back on biotech and crypto next week, but I have a feeling that's where the explosions are going to be.
Yeah, very likely, because the best setups are basically there right now in biotech.
Yep. Okay, buddy. Have a great week.
All right, you too, Howard.